Today I'm going to show you how to find stocks before they blow up, the same kind of stocks that later appear all over social media with headlines like, "This stock went up 300%, or "Early investors turned small money into massive gains," and the truth is most people only see these stocks after the move is already over, but smart investors know how to spot them early, long before the crowd arrives. So if you stay till the end of this video, you'll understand a complete step-by-step mindset and strategy to identify high-growth stocks before they explode. Not hype, not guessing, but logic, data, and behavior patterns that successful investors use again and again. First, you need to understand one very important rule: stocks do not blow up randomly. Every massive move has a reason behind it. Sometimes it is earnings growth, sometimes a new product, sometimes a change in industry trend, and sometimes big money quietly entering the stock. So your job is not to predict the future perfectly. Your job is to notice early signals before everyone else does, and these signals usually appear in three areas: the business, the numbers, and the price action. Let's start with the business itself, because great stock moves always start with a great story, but not a fake story, a real business story. You should focus on companies that are solving a real problem or operating in a fast-growing industry. Industries like artificial intelligence, renewable energy, electric vehicles, cloud computing, cybersecurity, healthcare innovation, fintech, and digital payments are examples of sectors where growth can be explosive. But do not just buy a stock because it sounds exciting. Dig one layer deeper and ask simple questions. What does this company actually do? Who are its customers, and why would its revenue grow faster in the future than it did in the past? Early-stage blow-up stocks often come from small or mid-sized companies, not giant companies, because smaller companies have more room to grow. A $10 billion company doubling is easier than a $1 trillion company doubling. So look for companies that are still under the radar, not constantly discussed on mainstream media, not trending every day on social platforms, because by the time everyone is talking about it, most of the upside is already gone. Next, you want to look at revenue growth. This is one of the strongest signals of a future breakout. Companies that later explode in stock price usually show accelerating revenue growth before the stock moves. Not flat revenue, not declining revenue, but growth that is getting faster year after year or quarter after quarter. For example, if a company grows revenue by 10%, then 18%, then 30%, that acceleration is a big green flag. It tells you demand is increasing and the business model is working. Earnings are important too, but for early growth stocks, revenue matters more than profit in the beginning. Many explosive stocks were not profitable at first, because they were reinvesting money back into growth. What you want to see is improving margins over time, or at least a clear path to profitability. This shows the company is not just burning cash without a plan. Now let's talk about one of the most overlooked areas: management and vision. When you find a potential breakout stock, look at the leadership, read interviews, investor presentations, and shareholder letters if available. Great leaders often think long-term. They talk about vision, expansion, and innovation, rather than short-term stock price. Many massive stocks were led by founders or CEOs who deeply understood their product and market, and investors who recognized strong leadership early were rewarded later. After understanding the business, we move to the numbers. Because hype without numbers is dangerous, one of the best tools to find stocks before they blow up is growth metrics combined with reasonable valuation. You do not want to overpay even for a great company, so look at ratios like price to sales, price to earnings if the company is profitable, and compare them with industry averages. A stock with strong growth but still reasonable valuation has much more room to run. Another powerful signal is institutional interest. Big investors like mutual funds, hedge funds, and pension funds move markets. When institutions start buying a stock quietly, volume increases slowly, ownership reports change, and the price begins to form a strong base. You can often see this in quarterly filings or through rising average trading volume. The key is to notice accumulation before the breakout, not after. Now let's shift to price action, because price always tells the truth, even before news comes out. Stocks that are about to blow up usually go through a phase of consolidation. This means the price moves sideways in a tight range for weeks or months. During this time, weak hands sell, strong hands accumulate, and volatility decreases. This calm period often comes before a big move. Patience here is critical, because many people get bored and leave right before the explosion. Watch for higher lows on the chart. This means buyers are stepping in earlier each time the stock pulls back, even if the price is not making new highs yet. This is a bullish sign. It shows demand is increasing quietly. Volume is another major clue. When volume starts increasing slightly while price stays stable, it often means smart money is entering the stock without pushing the price up too fast. Breakouts matter, but only quality breakouts. When a stock finally breaks above a key resistance level with strong volume, that is often the moment it enters public awareness. But if you did your research earlier, you are already positioned before this happens. That is how you find stocks before they blow up, not chasing green candles, but preparing during quiet periods. Another secret most people ignore is catalysts. A catalyst is an event that can change how the market views a company. Examples include earnings reports, new product launches, regulatory approval, partnerships, industry tailwinds, or expansion into new markets. You should always ask, what could make investors suddenly care about this stock, and when could that happen? Stocks often move sharply when expectations change, not when news is already obvious. Social sentiment can also be useful if used correctly, not to follow hype, but to spot early interest. When you see a company slowly gaining attention on forums, social media, or niche investor communities, before mainstream coverage, it can be a signal that something is brewing. Just be careful to separate real discussion from pump and dump noise. Always go back to fundamentals. Risk management is just as important as finding winners, because not every stock you pick will blow up, and that is normal. Successful investors focus on probabilities, not perfection. Never put all your money into one idea. Diversify across multiple high-potential setups, and always know your exit plan. Decide in advance how much you are willing to lose if you are wrong. This protects your capital and your mindset. One more mindset shift you must make is patience. Stocks that blow up usually take time before they do. Weeks, months, sometimes years. Many people sell too early because they want fast results, but the biggest gains often come from holding through boredom and doubt. As long as the original story and numbers remain intact, patience can be your biggest advantage. Also remember that market conditions matter. Even the best stocks struggle in weak markets, so always be aware of the overall trend. When markets are in strong uptrends, breakout stocks perform much better. When markets are falling, it is often smarter to wait and build a watchlist instead of forcing trades. Preparation during bad times leads to profits during good times. To bring everything together, finding stocks before they blow up is not about one indicator or one trick. It is about combining business quality, growth numbers, leadership, price behavior, volume, and catalysts. When multiple pieces line up at the same time, your odds increase dramatically. This is how smart investors consistently find opportunities before the crowd. If you start applying this approach step by step, your thinking will change. You will stop chasing hype and start spotting potential early. You will become more confident in your decisions, and over time, you will build a watchlist full of high-quality stocks ready for their moment. Remember, the goal is not to catch every breakout. The goal is to catch a few great ones that can truly change your portfolio. This is exactly the mindset we focus on here at Stock Predictor, learning how to think like smart money, not emotional money. If you found value in this video, make sure to support the channel, because more advanced strategies, real examples, and deep breakdowns are coming, and with the right knowledge, patience, and discipline, you can absolutely find stocks before they blow up rocket.